Ladies and gentlemen, it's your boy, Ryan Dins, for another wonderful episode. And on today's episode, we're going to talk about Johnson & Johnson. This is clearly one of the biggest and most popular dividend stocks there are. Every hedge fund has it. Every investor, I believe, should have it in their portfolio. It's pretty low risk, but we're going to get down to it right now. Woo! Johnson & Johnson has a PE ratio right now of 25.3, which is not so good. I mean, I would prefer it to be around 20 or a little bit lower, but at the same time, this keeps growing. And it's one of those products that are not going to go away no matter if we have a recession and anything that happens, because Johnson & Johnson, you're going to need those products. They make the most popular baby products. They make a lot of health products that everyone uses. So, you know, even though the PE ratio is a little bit higher, I would just wait for dips right now. You know, right now it's in the low 160s. You want to start looking to buy that. I think a great buy would be 120, but anywhere around 140 would be, I think, a pretty good call at this point. So if you see a dip, I would definitely pick up a little bit Johnson & Johnson. It also has a dividend yield right now of about 2.5%. That is a little bit lower than I would like. I like my stocks to be in the 3 to 6% range. Some of my other stocks are much higher than this. Johnson & Johnson is a dividend king, which means it's consistently increased its dividends for 50 consecutive years. That means they don't want to lose their dividend king status, so they're going to continue to raise their dividends every single year. The only reason it's 2.5% is the growth has exceeded the dividend raises. That means if you own the stock, the price is going to go up as well as the dividends are going to increase next year. And with a dividend king, you can be sure of it. And it's over 50 years. Their reputation speaks for itself. They also are increasing their cash flow every single year. Last year, it was $34.7 billion cash flow. Only 5 years before that, it was in the mid-20s. So it keeps, every single year, their cash flow increases by a couple billion. I mean, it's growing. It's a growing company. It's a safe, stable, growing company. I think everyone should have at least some of it because, you know, my portfolio, I have a little bit more risky stuff, but you want this in your portfolio because you know it's just going to continually grow. Johnson & Johnson is just a great stock, so I recently picked some up last week. I'm going to continue to buy maybe one share a week until I have a pretty good position in it. You know, right now I only have one share, but I'm going to buy one share every week for 3 months or so. So next thing you know, I'll have a pretty good position in that. So that's my video. Make sure you subscribe, hit the like button. We're going to talk about different dividend stocks. We're going to talk about money tips to get that passive income going. Because the most important thing about passive income is you continually grow it until you are financially free. I'm going to be financially free in 7 years, and I'm going to show you all how to do that. Ladies and gentlemen, this is the view from my condo here in Winter Park, Colorado. Now, the reason I talk about accumulating passive income is I have to work hard to have a view like that. However, once I get over $1 million in dividend stocks, I'm going to be able to live every day like this and never work. That is the goal. So keep your eyes on the prize and keep collecting those dividend stocks. Woo!